勇敢地往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达。我相信我可以，有目标就往上爬。你相信你可以，勇敢地往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达。Hi, good morning everyone. Welcome again. Today it's the third episode. Today is episode 3 of my Secrets Revealed, Techniques to Solve Tax Audit Issues. Well, welcome. I know you guys are very early. You guys are really early. We are going to start at 11 o'clock, right? 11 o'clock sharp. We are going to start and we will tell you more, about techniques to solve tax audit issue. And today, the topic that we're going to talk about is return guarantee. Yes, return guarantee. Yeah. So I'm going to reveal my secrets to you at 11 o'clock later. But you know what? I see so many people are already right now in the Facebook Live viewing it right now. But don't let your friends, your family, your business partner, your business associates to miss this session. This session is going to be very interesting because today we're going to talk about return guarantee. So take this opportunity, share this Facebook Live out. It's simple. Just look at the bottom of a screen. You will see the share button. Click that share button. Whether you're viewing it from a computer or you're viewing it from your phone, just click the share button so that you can share this out with your friends, your family, your business partner, business associates, so everyone can learn the secret, right? So I'm going to reveal my secret this time, which is about return guarantee, yeah? So share this out right now. I'll see you at 11 a.m. sharp, yeah? 11 a.m. we will start today's Facebook Live session. I'll see you at 11 o'clock.
我相信我可以有目标就往上爬。你相信你可以勇敢地往前冲吧。有想法就有办法，有办法就不用怕，我们一起到达。
Hi everyone, welcome. Wow, I see more and more people are joining our Facebook Live right now. Thank you so much for joining so early. We will start sharp at 11 a.m. Yeah, at 11 a.m. That means only a few more minutes, 3 more minutes, right? 3 more minutes only, and we will start today's Facebook Live. And today I'm going to share another secret. Yes, I'm going to review another secret on the techniques to solve tax audit issue. And today we're going to talk about return guarantee. Now, if you do not want your friends, your family, your business partner, your business associates to miss this session, this is a really wonderful session, share this Facebook Live out. Very easy. Just look at the bottom of your screen. You will see the share button, right? Click that share button, whether you're viewing it from a computer or you're viewing it from a phone. Click the share button so that you can share this out with your friends, your family, your business partner, business associates, right? So that everyone can learn my secret together, right? Today, I'm going to review another secret on how to solve tax audit issue, and that's about return guarantee, right? So, in just 2 more minutes time, I'll see you and we will start very soon. Yeah. So quickly take this opportunity right now. Share this out with your friends, right? We are going to start in just 2 more minutes, right? I'll see you at 11 o'clock, yeah? All right, I'll see you then.
相信你可以勇敢地往前冲吧，有想法就有办法，有办法就不用怕，我们一起到达。
All right, it's 11 o'clock already, and as promised, we will start today's Facebook Live. And I can see more than 50 people already in the Facebook Live. I know more people are coming in. I know more people are coming in right now to view this Facebook Live because today I am going to share another secret. I'm going to reveal another secret to all of you. And that is on how to solve tax audit issue. Another technique to solve tax audit issue. And today we are going to talk about return guarantee. Well, I see someone already here and say good morning to me. Hi, Richard. Hi, Richard Lyon. Welcome again. I think this is probably your third time joining us. Wow, thank you so much for following. Now, for those who have just joined us, now this is the last chance for you to quickly share out this Facebook Live to your friends, your family, your business partner, your business associates, right? Because we are going to start already. And right now, if you share our Facebook Live out, they are going to learn this secret together with you, the soft tax audit issue. Very simple. Look at the bottom of your screen. You see the share button, right? Click that share button, whether you're viewing it from a computer or viewing it from your phone. You can always click the share button so that your friends will join you and view this together with you. Or if you have anyone in your mind that you want them to come in and view this and learn this together with you, just tag the name in the comment box straight away. Tag your friend's name into the comment box so that they will come in and learn this together. All right, so let's get things started. So today we are going to talk about tax secret, right? We're going to talk about secret again, techniques to solve tax audit issues. Yeah. So today is already my third episode. Yes, that means we're going to talk about third issue. Now, in case you're joining us for the very first time, don't worry about missing the first and second episode because you can still find these recorded videos in my Facebook page. So take this opportunity to like and share and follow our Facebook page, that is YYC Advisors, or my own Facebook page, Tax Guru Zen Chow. You'll be able to find the videos that we have done, right? The previous Facebook Live session that we have done. But of course, if you join us live, you will be able to ask questions on the spot. Yes, the whole good thing about this Facebook Live is you can ask questions on the spot about this current issue, and I will take all my ability to answer to all your questions. Yeah. All right. Now I see someone sharing with it. Feng Ling has shared it to your friends. Thank you so much. Now, but let's quickly do a quick survey this time. This is the third episode already. But how many of you here actually join us for the very first time? If you're joining us for the very first time, can you put in the comment box right now? Put 1. Just put number 1 if you're joining us for the very first time. Put number 1. If this is the second time or third time that you're joining, you can put either 2 or 3, right? You can put number 2 or number 3, right? So I want more interaction with you all, right? Because the whole idea of Facebook Live is I will be interacting with you all. I'll be answering to all your questions. So can I just see out of 70 over plus people right now, how many of you joining us for the very first time? If this is your first time, please put 1. Please put 1 in comment box. If it's your second time, put 2. Of course, if it's your third time, 3, right? Right, this is the third episode already. Well, I see Feng Ling joining us for the very first time. Yes, Jessie also the first time. Richard, yes, thank you, Richard, for following me. You have been following my secrets revealed, yeah? So this is your third time. Thank you, Richard. You is second time. Annie is the first time. Welcome, Annie. Well, Jing Ying also the third time. Wow, thank you, Jing Ying, for supporting me. Thank you so much. Well, Joanne is a first timer. I see quite a number of first timers again this time. Now remember, as long as you follow us, every week I'll be presenting a new issue for you to learn, right? To learn the secrets to how to solve tax audit issue. Yeah. Well, Lynette also first time, and I think this one is in Japanese, right? So Rara, right? Is that Rara? Okay. Also 1, right? Wong is first time. Chong Ziling also first time. Wow. Okay. So many first timers. Now let me take this opportunity to briefly introduce who I am because this is your very first time seeing me, right? Now, of course, I'm Zen, right? Zen Chow. People call me the tax guru of YYC. Well, that's just a glamour name, right? But the fact is that I'm the tax director. I'm the head of tax department of YYC Group. Now, you probably may be wondering, who is YYC over here? Very simple. Just let me do a quick introduction on who YYC is here. Who is YYC over here? Now, YYC is actually an accounting and advisory firm established since 1974. And our aim is to empower entrepreneurial success here. To do that, of course, we have a vision. Our vision is to be the number one world-class accounting advisory firm in Asia. And our mission is to inspire everyone so that everyone can overcome their odds and, more importantly, find fulfillment in life. Yes, that's a very important mission, yeah. Now, but to do that, YYC has 3 very important brand promises. Now, what are the brand promises that we always have to uphold? You see, now the very first one is to share our expertise. Yes, we want to share our expertise. See, the reason why we want to do this Secrets Revealed series, why we want to share our experience to you, because we want to share expertise to everyone out there. And we want to show the most proactive care to our clients, because to our clients, we want them to have the most positive experience ever. So these are our brand promises. Now, you may think, well, YYC is probably just a normal accounting and audit firm. No, not really, because a normal accounting and audit firm would have client services only, like audit service, tax service, accounting service. But in YYC, we have much more than that. You see, we have our own advisory arm, and we do a lot of advisory services, like strategic planning, restructuring, valuation, even cloud transformation. Yeah, people are talking about cloud right now, right? We help people to do cloud transformation. We also have our own business school. That means we hold a lot of seminars, workshops, talks from time to time. And we also serve international company, right? Overseas company, because we have global business services like outsource accounting, outsource bookkeeping, outsource payroll, etc. Now, of course, if you see any of these services that interest you, feel free to drop us a message. Feel free to PM us, right? Our professional team will get to you very soon, yeah? Now, YYC, I was saying, established since 1974. That means we are not young. We are 46 years old this year. And we call ourselves an international firm. Yes, because we don't just have branch in Malaysia. We also have branch in Singapore. We have more than 800 employees, more than 20,000 clients, and we have trained more than 120,000 participants because we have held more than 5,000 workshops. Now, these are all the awards given to YYC throughout these years, yeah? Now, of course, because we have gone international, right? We are not just in Malaysia, right? We have branches not just in Klang Valley, which is Kuala Lumpur. We also have branch in Johor, in Penang, and of course, we have branch in Singapore as well, right? In Singapore as well. Now, every time we come to this part, I like to do a very simple introduction, because right now we have close to 100 people already. Close to 100 people viewing today's Facebook Live. Can I just ask you a very simple question just to be more interactive? May I know, where do you come from? Where are you viewing this from? Yeah, because you see, every time when I do live, I have friends from everywhere, people from everywhere viewing this. So can you just tell me, put in the comment box, where do you come from, or where am I viewing this Facebook Live from? You can tell me which state you are from, which town, which city you are from. Or if you say you're coming from Kuala Lumpur, you can be more specific, which part of Kuala Lumpur, which area of Kuala Lumpur do you come from? Put into the comment box, let me just have more interaction with all of you. I want this to be very interactive, because this Facebook Live is supposed to be an interactive session, because I'll be answering to your questions later, yeah, when you ask me questions. So put in the comment box, where do you come from? Wow, I have Jinging from KL Star Park. Okay, that's very special. I used to live in Star Park last time, yeah. I used to stay there. Yeah, Jinging, thank you so much. And I know Jinging has joined me for the third time. Thank you so much, Jinging. Who else? Who else is coming from other parts of the country or other parts of city? Maybe you are from East Malaysia, North Malaysia, or South Malaysia. I have Miki Siu coming from Kajang. Wow, I like the satay in Kajang, yeah. But I know the satay now is like everywhere already. You don't really have to go to Kajang for that famous satay. Yeah? All right. Yes. Cheryl say I'm late. Cheryl, it's okay. You're not late yet, right? We have just started, Cheryl. Yeah. We're just trying to say that. Where are you from? Cheryl, maybe you can tell me where you're from. You're from JB. Okay, Cheryl is from JB. Richard is from Cheras. Richard is also following me for the third time already. Thank you so much, Richard. Right. Go is from Melaka. Yes. Nurul Huda is from Shah Alam. I have Nelson from PJ. Wow. So we have most people from the Klang Valley area. Of course, we have some from the southern part, like Cheryl, like Go Ikim, right? From the southern part of Malaysia. Do we have anyone from the northern part, or maybe the east coast, or maybe East Malaysia? Centra is from Clang. Wow, Centra, I hope Clang is fine right now. Right? I heard, Clang is right now under conditional MCO. Yeah, so hope Clang is fine. Yeah, and please stay safe. Remember, wear mask and use hand sanitizer. Okay, thank you so much for your response. So now that I know that people are coming from everywhere around Malaysia to view this. Yeah, let's don't delay this further because I know we are close to close to 100 people viewing this right now. Let's go straight into today's tax audit issue. And today we are going to talk about this issue called return guarantee. Now, today is episode number 3, right? Episode number 3. Yeah? In case you have just joined us, let me remind you, don't worry about missing the first episode or second episode because the previous Facebook live session is available in our Facebook page. Yeah, just go to YYC Advisors or my own Facebook page, Tax Guru Zen Chow. You will find the video, right, the recorded video on our Facebook Live previous sessions for episode 1 and episode 2. You'll be able to see the previous issues. But today, the issue that we're going to talk about is on return guarantee. Yes, we're going to talk about return guarantee. Now, some of you may know what return guarantee is all about. Some of you may say, hey, what is this return guarantee? Now, to make things very simple, return guarantee basically means I will guarantee your return. I will guarantee your income. That means if I will probably enter into a contract with you and say for the next how many years or for the next how many months, right, I will be giving you a guaranteed amount as a return back to you. That's what we call return guarantee. Now, did you know that a return guarantee, right, could be disallowed? It could be non-tax deductible if you don't have your proper documentations, if you don't plan it well. Now, be very careful with this. If you have ever entered into a return guarantee agreement with anyone, make sure you have all the arrangement done properly, all the scope spelled out properly, and with the proper agreement. Yeah. Now, why do I say a return guarantee could be not tax deductible? Let's go back to basic. Yeah. Now, the basic general principles of deductibility is that under subsection 33(1) of the Income Tax Act, now we go back to the basic. Under subsection 33(1) of the Income Tax Act, it says for an expense to be tax deductible, it has to fulfill all these 5 elements. Now, the first is it must be an outgoing or expense. Well, simple, right? When you have a return guarantee, you pay someone a return guarantee, definitely it is an outgoing or expense, right? It must be wholly and exclusively. Now, what do you mean by wholly and exclusively? It must be wholly for your business. That means the reason why you have to pay a guarantee for someone, it must be because of your business. It must be because you want to generate more income, therefore you need to incur such expense. It must be wholly for business purpose, right? And it must be incurred. Now, when I say incurred, it means it cannot be a provision, it cannot be an estimate. It must be a firm, confirmed amount, right? Accrued or confirmed amount, and then you call it incurred. You have the obligation to pay, so you don't just estimate or just do a provision, yeah? And it must be during the period. That means whenever you have to incur a certain expense, it must be incurred during that particular period for you to claim expense as deductible expense for that period. You cannot incur something in future and then you go and claim the deductible expense for that particular period. Or you also cannot incur something during that period and you say, I want to claim deduction later. Also cannot, right? It must be incurred during the period and then the deduction is claimed during that period as well, yeah? And most importantly is it must be in the production of gross income, which means whatever expense that you incur, it must be incurred for the purpose of getting more income, producing more income, right? If you incur something that is not for you to make more income, that will not be deductible, yeah? So these are the 5 things, right? General principle for an expense to be deductible. So what is the issue this time? Now, let's look at our case. Now, we have got this case, right? Which today I want to share with you. A real life case of which our client got audited, right, got investigated, and we helped the client, right, to solve this issue and somehow help the client to reduce the tax and penalty, right? How did we do this? All right, let's look at the background. Let's look at the background of the issue here. Now, our client is a property developer. All right, our client is a property developer. So our client has then developed a mixed development project. Yeah, and this mixed development project consists of what? residential units, okay, condominiums, yeah, residential units, water theme park, right, and also shop offices, right, shop lots, okay. So it's a mixed development project, and there are residential units in there. There's a water theme park resort in there, and there are some shop office lots as well, right, shop offices as well. Okay, so when this developer developed this project, the developer would then have to sell it, right? Sell the residential units, right, to people, to purchasers, right? And there will be investors. There will be investors who want to buy the residential units for investment purpose, right? So now, then there is this option. The developer gives the purchasers this option. They say there's an option for the purchasers of the residential units to lease back. That means that if you have purchased the residential unit, you can rent it back, lease it back, yeah? And the terms given is that if you rent it back, if you lease it back, right, you will then get some rental return equivalent to 35%, right? 35% of the purchase price of the unit. Of course, when you lease it back, right, it says you have to lease it for 7 or 8 years, right? There are two phases over here. The first phase is 7 years. The second phase is 8 years, right? If you agree to lease back your units after you have purchased them, right, you can get a guaranteed return, which is equivalent to 35% of the purchase price of the unit, right? So investors like it. Investors will think, okay, if I buy this, I rent it back to you, I can get 35% guaranteed, right, on my purchase price. So, right, a lot of investors bought it and they say they want to do the leaseback. Now, but our client who is a developer, right, they don't manage the whole thing on their own, right? Instead, the client appointed a company A. Now, company A is a related company. It's a related company of the developer, right? Appoints company A as the operator of the resort, right? Now, because developer only develops it, and thereafter he hands it over to the related company, company A, to act as an operator of the resort. And therefore, this operator, right, company A, would then enter into tenancy agreements with the purchasers, right? That means the client, the developer, appoints the resort operator, and right, when you appoint the resort operator, the terms is that the resort operator, company A, would then need to enter into tenancy agreements with purchasers, right, for the residential units, and guarantee to pay a sum equivalent to 35% of the purchase price of the unit. Now, therefore, right now, who is going to pay the investors? Right? Who is going to pay the purchasers? The resort operator, yeah? Company A is the one that will enter into tenancy agreement and will pay the purchasers, the investors. Now, but of course, because the developer asked the operator to do so, the developer asked company A to do so, the developer then say, all right, in consideration of company A agreeing to enter into this agreement, the client, which is the developer, will reimburse company A back, right? Which is 50%, equivalent to 50% of the guaranteed return paid to the purchasers. That means the developer now says, right, I appoint you as the operator, you enter into agreement with the purchasers, you will pay the 35% guaranteed return, but half of it I will bear 50% of it, right? That means the developer will bear 17.5%, right? 17.5%, half of 35%, right? 75.5% will be borne by the developer, right? So up to now, it sounds okay, right? It sounds okay, right? Now, in accordance to the written guarantee agreement, now therefore, right now, this developer, the developer and the resort operator, they then have an agreement. There's an agreement because you see, the developer appoints company A, right? Our client appoints company A. So therefore, there is an agreement over here, and the agreement say, right? The agreement say, between the client and company A, they say, they will reimburse this company A's guaranteed return in 7 and 8 years, right? For the two different phases, right? For the two different phases, because this company A has entered into tenancy agreements with the purchasers, and company A will pay guaranteed rental return every year to the purchasers for 7 or 8 years, right? Depending on phases. There are two phases over here. The first phase is 7 years. The second phase is 8 years. So this developer also say, I will reimburse back, right, 50%. Now, what happened next is, once this agreement has been signed, the developer then say, okay, that means I have an obligation to pay back company A, right? The 17.5%, remember, because 35% is the total guaranteed return, and I have a 17.5% that I have to pay, and the developer then charge out this 17.5% return guarantee, right, as property development expenditure into its account. It charge out the whole thing into its account in year 2013 and year 2014, right? Because the first phase was completed in 2013, so the first phase was totally charged out in 2013, and the second phase for 8 years, he charged out totally in 2014, right? Now, but what happened is that, hey, look at this. The resort operator will only pay to the purchasers every year, right? Every year, this resort operator will pay to the purchaser, right? And this developer says, right, because I've entered into an agreement with you, I charge out the whole amount, the whole lump sum for 7 years, the whole lump sum for 8 years. I charge out everything in years 2013 and 2014. But the resort operator only reports it progressively, right? The resort operator does not report the income in a one lump sum, because to the resort operator, this thing is for 7 and 8 years, right? That means I will only take in the income year by year. Every year when I have to pay the purchaser a return, then I will recognize the income from your side. So every year they take in year by year progressively, right? In company's A account as income. Now, you see a problem here, right? You see a problem here. Now, when the Inland Revenue Board, right, comes to audit, to check, to investigate this company, this is what happened. When the Inland Revenue Board comes and check on the client, the developer's account, right? The developer's account, yeah, they found this issue, right? These are the issues raised by the Inland Revenue Board. He says, first, right, the Inland Revenue Board suspect that the expense is not even wholly and exclusively incurred in the production of gross income. Why? Because, you see, the developer pays guaranteed return, right? Or pays a return guarantee out. But there is no agreement signed between the purchaser and the developer, right? The developer claims that, oh, because I have to pay a return guarantee to the purchaser, the purchaser actually has purchased my unit and I have the obligation to bear a 50% of it, and therefore this return guarantee is my expense incurred in the production of gross income. But when we look at the agreement, when the Inland Revenue Board look at the agreement, there is no agreement between purchaser and developer. There is nothing mentioned by the developer to the purchaser that I will guarantee your return, I will pay you. Now, so then the Inland Revenue Board thinks that this expense may not qualify Section 33 and cannot satisfy, the deductibility of Section 33. And therefore, the Inland Revenue Board then disallowed the whole amount. This allowed the whole amount of the guaranteed return that has been incurred by the company. Why? Because the Inland Revenue Board then say, you charge out the full amount, right? The whole 7 years amount, the whole 8 years amount, you charge out everything in years 2013 and 2014. But that is not how the resort operator declare its income. The resort operator declare the income progressively, because this is a 7-year return guarantee, 8 years return guarantee. The operator reports it year by year progressively, right, as income. So the IRB says, no, you can't charge out everything. The whole thing is disallowed, right? And it says not the whole amount is reported in the resource operator account. Therefore, disallowed the whole thing. So the issue is out, and therefore, you know what happened? This Inland Revenue Board then disallowed 9.6 million, right, worth of expenses in year 2013 and 9.8 million in year of assessment 2014. If you add these two up, it's 19 million. Yeah? 19 million plus being added back. Imagine a 19 million plus worth of expenses being added back. Did you know what is the tax implication over here? The tax rate was 24%, yeah, right? And imagine what is the tax that you have to pay? A 19 million plus, being added back. That means that this company has to pay so much more tax and penalty as well. and penalty. That means this company has to pay close to a 10 million worth of tax and penalty because a 90 million has been added back and there's a penalty on it, right? A penalty is 45% of the additional tax. So this has happened, and then we go in, we help the client. Now, obviously, you will see that it's wrong. Yeah, it's wrong to say that, hey, if the operator only declares the income progressively, right? And also there is no agreement between the purchaser and the developer, how do we fight this? How do we substantiate this? Yeah, this is what we do, right? This is the ground of appeals, right? We tell the client, we tell the Inland Revenue Board, we say, look, okay, for the developer to sell the property, the developer has to give certain things to the investors. They have to attract the investor to buy the property, and therefore they offer this return guarantee scheme. And the developer doesn't really have to do it on their own, right? They can appoint someone to do so, right? Even though they appoint someone to do so, if there is a proper agreement, right, between the developer and the operator to say that, hey, if you are willing to take up as a resort operator, if you're willing to pay the return guarantee to someone, I will bear part of it. If there's a proper arrangement, well, this can be called as incurred in the production of gross income, because that is the whole arrangement, right? The developer initiates the return guarantee scheme, but gets someone to do it, and of course need to pay back the resort operator on that, yeah? But the issue here is the resort operator does not report all the income one go, right? What resort operator did was they actually report the income year by year. So we went in, we say, look, this is what we do, right? Because the resort operator reports it year by year, we propose that we will do a matching concept. Well, that means the developer can also charge out into the developer's account progressively as per the agreement, right? That means this resort operator reports it progressively every year. The developer can also charge out this expense year by year progressively to match back the resort operator's income. So this is what we presented. We say, okay, these are the amounts that have been reported in the resorts operator account. So what we want to do is all the 50%, that is borne by the developer will also be charged out, will be accepted as a deductible expense, right? So we present this, we do everything again. Of course, whatever that has not been recognized, whatever that is not recognized in the resort operator's account, we cannot charge them out, right? But at least whatever that has been already charged out, we say, let them have 50%, right, of this, right? Because we will do the progressive charging out of expense. Now, we then substantiate with an agreement, right? We show the Inland Revenue Board, look, there's a proper agreement between the developer and the operator, right? And it has been set in the agreement that the resort operator, right, will pay the purchaser, but the developer will have to bear 50% of it. And that is part of the whole scheme, right? That is part of the whole arrangement, right? We have proper agreement, and this become a part of the whole business arrangement, yeah? And we showed also to the Inland Revenue Board that tax computation of the resort operator has also reported the income. That means there is a matching concept, right? There's a matching concept over here. The company A, right, the resort operator reports the income, and all the audited report, the Form C, the tax computation shows that income has been reported. So the developer has all the rights to charge out as expense. Yeah. So with all these explanation and documents shown, we managed to at least get deductions for the developer, right, on progressive basis. Of course, we cannot let the whole amount being charged out, but at least progressively it can be charged out. That means this developer does not lose out on the deductibility. Only thing is the timing difference, right? They get a different timing to charge out the expense, and they did not lose out on the whole expense. So what's the rationale of the whole case? Yeah, you see, as long as you can prove that the expense is incurred wholly and exclusively in the production of gross income, this should be deductible. And it's very important to look at the matching concept. Yeah, because in the agreement, it is not stated clearly that, oh, I will pay you one lump sum, right? It's stated that the whole return guarantee is for 7 years, is for years, and therefore the resort operator takes it in as progressive income. Therefore, to do a matching concept, the developer will charge out at the expense progressively as well. Yeah. So as long as the resort operator can prove that the expenses is the income, the expenses of developer is the income of resort operator, then the matching concept is in, right? Is in, right? So therefore, we managed to help the client, right, to still get the deduction for the expenses. It's just the timing difference. They will have to charge out slowly every year instead of all lump sum in 1 year. Now, what's the moral of the story? First, make sure you have proper documentations and everything is spelled out clearly. You see, one of the problem with this issue is the developer and the resort operator are related companies. Yeah, they don't have a proper documentation or terms that spell out how will they charge out this expense or how will they take in the income. Is it progressively or is it one lump sum? So when there is no proper clause or proper statements that spell out all this, the Inland Railroad would come in and they would challenge, why do you charge out the whole amount? So you got to have a proper documentation and spell out the scope of service, the basis of charges. Right? You got to spell out that very clearly, right? To prove that your expense is in production of gross income. Yeah, and always review your agreement. Ensure all expenses are charged out according to the terms. Right? If the terms are there, follow the terms, right? And you will be able to get your expenses deducted, right? So from here, we know that we need to have a proper documentation so that you know how to charge properly. And always remember, return guarantee will be deductible as long as you can prove that it is incurred in the correct period, right? And you have your agreement to support that this is an expense incurred in the production of gross income. All right, so that is how you get deduction for return guarantee. Yeah, so take note of this. All right, so I hope you have learned something again. Now, okay, of course you may say, all right, now if I receive any audit case here from the Inland Railway Board, if they come and challenge me and disallow some of my expenses, right? Are you able to help? Right? I always tell my viewers who have been following us, right? If you have got any audit case, don't be afraid. Please don't be afraid. Don't let Inland Railway Board slap you with a huge amount of tax and then say, oh, this time I have to pay so much tax, I have to pay so much penalty. Yeah. Don't worry about that, because if you receive any audit letter, feel free to contact us, send us a message, drop us a message at our Facebook page. Right, we can give you a complimentary online consultation, right? We can do a complimentary online consultation for you and see how we can help you, because the aim here is, in YYC, we want to solve your tax audit issues, right? We want to help you to solve your tax audit issues. So if you receive any tax audit letters, feel free, drop us a message, send us the tax audit letter. Yes, send us a copy of the tax audit letter so that we can look at it. We can see how we can help you. We may not be able to drop the whole issue, but we will try our best to reduce the tax penalty as much as possible. All right. So question time. Yeah, I see Chen Ho is already sending in his first question. Wow, Chen Ho, I think this is also your second or third time joining me, right? I believe, yeah, because I remember last week you also asked certain questions, right? Thank you so much for your support. All right, Chen Ho is asking, hey Zen, yeah, what about the penalty imposed as they are under declaring income tax on the first year? Now, Chen Ho, right now, if we go back to this, look at this, okay? Now, the whole amount has been charged out as expense, right, in the developer's account, but in the resort operator's account, it was reported progressively. Look at it, these are all reported progressively, and there is still this amount that is not being charged out yet, right? Not being recognized as income yet, yeah, not recognized yet. So what we did was we tell the Inland Revenue Board, look, all these income that has been progressively recorded in the resort operator's account, please also allow the developer to charge out progressively, right? That means here, instead of saying, oh, the first year, right, whole amount is not deductible, well, the first year, the developer gets certain deduction, second year also gets certain deduction, but from third year, fourth year, fifth year onwards, the developer will get extra deduction because the developer has not charged out anything after that. You see, in third, fourth, fifth year, the developer doesn't charge out anything anymore, right? Because they have already charged out everything in the first 2 years. So what we did was we reduced the deduction for the first and second year because we can only charge out progressively. But for the third, fourth, and fifth year, we managed to reduce the tax payable because there is additional deduction for the company. Of course, you may ask, what about the penalty, right? If you don't have so much deduction, right? You go and take so much deduction and now the deduction is reduced, the income would have increased. Yes, there is still additional tax to be paid in 2013 and 14, and yes, there is still penalty to be paid, but you see, the amount of tax has been reduced, the amount of penalty has been reduced, and we are able to also reduce the third, fourth, and fifth year's tax even further. And not forgetting the after that, right? Even the fifth, the sixth, the seventh, and the eighth year, because you have all the progressive expenses to be charged out. And right, so we help the client to reduce the future taxes, right? And of course, this one we reduce the tax exposure and the penalty as well. Okay, so that is what we did, yeah, Chen Ho. All right. Let's see the other question over here. Jean, are you able to help for backlog cases? Yes, Jean. Now, I do not know what kind of backlog cases you are referring to, right? I do not know whether you are referring to backlog cases of which you have not filed in your income tax form, or backlog cases of which you have you have been audited, and you were not able to solve it, and then you want to probably reappeal it. Now, we can do something, but it really depends on the case here. If you say your audit has been concluded, then of course it will be more challenging. It will be more challenging, yeah, because we need to go back and we need to reopen the case. We need to reopen the case and fight the case for you. But it doesn't mean we can't. We may try. But if you say the case is ongoing, right, that is the best time for you to come to us, right? Because if you have any case that's ongoing, that is not concluded yet, right, that means the Inland Revenue Board has not finalized it yet, come to us, because this is the best chance for us to see how to solve your issue, how to drop your issue, okay, yeah. All right, so of course, if you say backlog cases as in tax compliance case are not submitted, of course we can help you to do them, right? We can help you to submit them. Feel free to drop us a message and we will get in touch with you and see how we can help you to clear off all your backlog cases, yeah. Okay, Chen Ho asked further, understand, thanks, was wondering whether it is possible to appeal for tax penalty imposed. Now, Chen Ho, we always try to appeal for penalty, right? I think you probably have heard of that. A penalty imposed by the Inland Revenue Board is usually at 45%, and that's already a concessionary rate. That's already a reduced rate, because the Inland Revenue Board will always say that I can actually charge you a penalty of 100%, right? So they will usually charge 45% of additional tax. But of course, what we did was we would also try to help to reduce the penalty rate, but that is on case-to-case basis. Yeah, that's on case-to-case basis, depending on the merit of the case. Of course, sometimes when it is a misinterpretation of law, or misinterpretation of something, we can get it reduced. But in our case over there, right, we managed to reduce a little bit. Of course, not a lot, but we managed to reduce the tax rate, penalty rate as well. But the most important thing here is when we reduce the amount being added back, that means the amount being not allowed, yeah, that is how we reduce the tax and penalty, yeah. So that is the whole idea. Okay, all right. Mei Ling is asking, would a sudden increase in tax that I volunteer. Okay, Mei Ling, probably you have not finished your question, yeah? You type halfway, then you accidentally send in this message, right? So you didn't finish your question. Now I wait for you to finish your question. Type in the full question so that I know what you're trying to ask. I think you probably want to ask that would there be a sudden increase in tax that I voluntarily declare, cause certain issue? Is it something like that? Yeah. While waiting for your full question, you probably want to ask, a sudden increase in tax, right? Yes, your question came in already. Okay, would a sudden increase in tax that I voluntarily submitted by 80%, wow, compared to the year before, cause them to suddenly audit me? Okay, now, Mei Ling, I must be honest with you that if you have a sudden increase in tax, yeah, it will not automatically trigger an audit. It is not like 100% they will come in an audit, because it all depends on why is there a sudden increase in tax, right? Why is there a sudden increase in tax? Because if the sudden increase in tax is due to you have additional income, right? You have made more sales, right? More sales, more profit, yeah. Then it's actually something that is logical for you to pay more tax. So no problem with that, definitely no problem. But if you say the sudden increase in tax is because you voluntarily go and declare something, right? Now, if you do voluntary disclosure, you should actually go back to the previous year, right? Previous year, and voluntarily declare that. And you know what? If you are going to do a voluntary disclosure, there are some techniques to this also. You got to declare an amount that is good enough, right, for the Inland Revenue Board officer to accept it. Yeah, that means you must be honest this time, declare it, clearly tell the Inland Revenue Board that, oh, I have done this thing wrongly, I've done that thing wrongly. Declare that, and you know what? If you do that, the penalty can be reduced. First of all, the penalty can be reduced to only 35% instead of 45%, right? It's 35%. And we can also try to help you. If you ask us to do voluntary disclosure for you, we can look into the case and see if there are certain things that we can ask for a leeway. You know, some gray areas, issues, we can probably also negotiate with the Inland Revenue Board officer and see if this one is in gray area. It can be deductible, it can be not deductible. No, it's really how you interpret it. We can actually ask the Inland Revenue Board to allow that, deduction. So when you do voluntary disclosure, there are a lot of things that you can play around. Yeah. So if you get us to help you, I'm sure we will do the best for you to reduce the tax exposure. Okay, Mei-Ling? All right. Now, okay, I have another question here. This one is from Winston. Is it Winston me? Okay. Okay, let me look at this. Yeah. Okay. Hi, Zan. This is a question about the profit and dividend received from US stocks investment and trading. What would you recommend on whether to deposit it into individual or company account to save tax? Now, okay, no matter you actually received it, whether it is into your individual or company's account, profits or dividends, right? Dividends that you receive from US stocks, yeah, is actually not taxable, right? It's not taxable unless you do stock trading. If you do stock trading, how you call it, actively, then this because you become your business income, and of course it is taxable. No matter you put it under company's account or individual's account, it will be taxable, right? It is not about which account you put in, yeah, right? But if you receive dividend from US stocks, you don't actually have to pay tax, right? You don't have to pay tax for the dividend, right, that you receive. And you ask me whether to put it under company's account or individual's account. Well, you should actually put it to the account where this entity is holding the shares. Right? If the company is holding the share, of course, the dividend should go into the company's account. If the individual is holding the share, of course, the dividend should go into the individual's account. Right? It really depends on which entity is holding to the shares. All right. Okay, now I have, some Mei-Ling is saying that sudden increase is due to a new source of income and better business revenue. Then, not a problem, Mei-Ling, right? If it's due to a new source of income, better business revenue, no problem with that, Mei-Ling. Of course, Mei-Ling say, actually, YYC help me to do Pindaan B. I just worry it will suddenly trigger them to audit me. Don't worry, Mei-Ling, don't worry. If it is due to a new source of income, it is due to a better business revenue, it will not automatically trigger an audit. Yeah? An audit will only be triggered if there is something unusual. Let's say your gross profit margin, it was not so high, right? It was very, very low. Let's say your gross profit margin was only 10% last time. Suddenly in 1 year, your gross profit margin becomes 40%, 50%. That kind of abnormal, or we call anomalies, right? That may trigger audit. Okay? All right, Serene Wong is asking, hi Zan, how about rental income? For more than 10 years? Is it advisable to declare now? Now, Serene, of course, if you ask me, if you have received rental, you should declare it, all right? You should declare it. Because if you don't declare it, it is a time bomb. Please remember, it is a time bomb. Because you see, if you don't declare it right now, one fine day, the Inland Revenue Board comes in and realize that you have received rental income and you have not actually declared it, they are going to slap you with a huge penalty, right? So what I would say is, go ahead, declare your rental income, well, first of all, the penalty will be less, right? Will be just 35% instead of 45. And you know, the best thing is, if you have declared all this income, yeah, your capability, your capacity to buy properties, you know, would be increased. Because many people will say, hey, I want to buy property, but you know, the income that I have declared seems like not enough. Now, of course, I'm not trying to tell you to not declare your income, but if you declare everything fully, your income that you have earned, you can use it to buy whatever properties or whatever luxury car that you want, and you do not have to worry about inland revenue coming to you. So I always advise people, I say, if you have earned such income, declare it so that you would have a peace of mind. You have a peace of mind to buy properties, to buy car, you know, whatever luxury item that you want to buy, you will have a peace of mind because you don't have to worry about Inland Revenue Board saying that, where do you find such money to buy, you know? And then when they check on you, they notice that you have such an income that you have not declared, then you cannot escape from penalty already. Yeah, so I would say do a voluntary disclosure. If you need our assistance, feel free to contact us. We will do our best to see how we can reduce the tax exposure for you. Yeah, Serene? Okay, any other questions? Any other questions coming in? All right. Okay. I think probably we have also answered to all the questions already, right? Which is really good, right? Thank you so much. Now, as usual, right? We always have our weekly tax audit issues for about 40 to 45 minutes. Wow. Today we have run for 46 minutes. Okay. We have one more question. Jingning. Okay. Let me answer to this first. Jingning says, what documents we need to provide if we receive audit letter? If we receive tax audit, is it we can adjust back the GL wording that have suspicious? Jing Yang. Now, if you have received tax audit letter, come to us, right? Come to us. Let's see what we can do for you. We can do a complimentary online consultation first. Yeah, see what we can do for you. Don't just simply go and adjust back the GL wording, right? That's not something that you should do, because that may mean you try to change your record. Yeah, right. Bring that tax audit letter to us first. Let us look at what is actually required first and see what we can help you first, because only from there we know what to do next. Now, I don't want to tell you like what you should do right now because I don't even know what are the issues. But if you have received a tax audit letter, show us, we see what are the issues first, then we can help you further. Right, remember, you can always drop us a message, send us a message on Facebook, right? We can always help you whenever you receive a tax audit letter, yeah? All right, Serene Wong say declare current year income and ignore the earlier, correct? Serene, I would say, okay, if you want to start off right now, that is the best thing. Of course, that is the correct thing to do. But it doesn't mean whatever that you have not declared in the past is not going to be a problem, yeah, because the time bomb is still there, yeah. But of course, we know that the Inland Revenue Board can audit 5 years, 5 years backwards, yeah. So if you declare right now, of course, there are still a 5 years thing for you to worry. But of course, if you go and declare 5 years backwards, that means all the 5 years that they can actually come and audit, they're all declared already. Yeah, so you know what I mean, yeah? Okay, so Serene, I hope you get what I'm trying to tell you, yeah? Okay, so let me see if there's any other questions over here. Okay, now Winan Me is asking further questions. Winan Me is asking, thanks Dan for the explanation. How do we define whether we are active trader or not? Is that definition of business income? Now, Winan, this is going to be more complicated, Winan, yeah, because to know whether you are really doing trading of shares or you're just investing, yeah, we have to look at this thing called badges of trade. Now, badges of trade has quite a number of elements in it. So I would suggest, Winan, why don't you drop us a message, right? Make an appointment with us so that we can look into your case first. Then only we see how we can advise you whether it is called trading or investment, right? Because the badges of trade has a lot of criteria, has 7 different criteria for us to look at. Yeah, I'm not able to tell you all the criteria one by one over here, but feel free to drop us a message, make an appointment with us, Winan, so that we can actually do and look into your case and see what we can help you to justify whether it is an investment or trading of shares. Okay, all right, Winan, I hope I've answered to you. Okay, you're welcome, Serene. No problem, Serene. All right. Okay, I think we have answered to all questions already. Thank you so much again for you joining us today, right? And remember, again, if you receive tax audit letter, don't be afraid. Don't be worried. Just send a copy to us so that we can help you to solve it, right? We definitely do our best to help you. And thank you so much for joining me for almost an hour right now. I hope to see you again next time, right? Because we will be revealing more secrets. We will be revealing more secrets on techniques to solve tax audit issues, yeah? So stay tuned. Remember to follow us. Remember to follow our Facebook page so that you know when we are going to have the next session again, right? So thank you so much again, right? I hope to share more secrets to you next time, right? And till then, we'll wish you a good weekend. Today's Friday, right? Have a good Friday. Have a good weekend. And stay safe, remember. Or stay safe. Remember to wear your face mask and use your hand sanitizer, yeah? All right. Thank you so much. You're welcome, Jin Ying. You're welcome, Mei Ling. Welcome, Nelson. You're welcome, CP. Right. All right. Thank you so much. And I shall see you again next time. Right. Thank you very much. Till then, goodbye. Goodbye.
我相信我可以，有目标就往上爬。你相信你可以，勇敢